Did you know that only 13% of investors are able to outperform the S&P 500 over a 10-year time frame? In fact, a single $10,000 investment into the S&P 500 10 years ago while only reinvesting your dividends would now be worth $34,532.50.
That's a lot of dough.
Today and every single Friday at 8 a.m. Central Standard Time, I share with you 5 dividend stocks that have not only outperformed the S&P 500 in the past, but have numbers to support that could keep on doing so.
Foreshadowing.
Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and since this video features some time-sensitive information, the best way to make sure you don't miss any of that is to make sure you're subscribed. And if you want to show support for me and the channel, make sure you guys leave a like on this video and comment down below which stock excited you guys the most from today's video. Now, let's go ahead and dive right into this week's list with number 5, Shoe Carnival, stock ticker SCVL. Today marks the first time I'm bringing this stock to you guys here on the channel, and I want to show you the numbers behind this stock. SCVL is a quarterly payer in the consumer discretionary sector, paying 54 cents per share per year with a forward dividend yield of 1.24%. SCVL has been paying and growing their dividend over the past 11 years. They have a 3-year dividend growth rate of 32.33%, a 5-year dividend growth rate of 24.32%, and a payout ratio of just 17.03%. Now, at the time of recording, Shoe Carnival was trading 7.01% off of their 52-week high. They have an ex-dividend date of October 7th with a payout date of October 21st. And looking at this chart, you're going to be able to see the growth of a $10,000 investment while reinvesting the dividends into this stock versus the S&P 500. SCVL would have turned that $10,000 into $54,947.87, which outperforms the S&P 500 by $20,415.37. Next up, coming in at number 4 is a stock I personally own in my Anyone Can Invest portfolio, and that's MasterCard, stock ticker MA. This is now the 7th time I mentioned MasterCard right here on the channel, and if you go all the way back to the very first time I mentioned it on July 1st of 2022, MasterCard is outperforming the S&P 500, so let's go ahead and look at the numbers behind this stock. MA is a quarterly payer in the technology sector, paying $2.64 per share per year with a forward dividend yield of 0.53%. MA's been paying and growing their dividend over the last 13 years. They have a 3-year dividend growth rate of 13.56%, a 5-year dividend growth rate of 16.23%, and a payout ratio of 15.88%. Now, at the time of recording, MasterCard was trading 1.63% off of their 52-week high. They have an ex-dividend date of October 9th with a payout date of November 8th. And looking at this chart, MasterCard would have turned a $10,000 investment into $70,433.92, which outperforms the S&P 500 by $35,901.42. And coming in at number 3 is another one I also own in the Anyone Can Invest portfolio, and that's Intuit, stock ticker INTU. This is now a record-setting 10th time I've mentioned any stock right here on the channel, and if you go all the way back to the very first time I mentioned it on July 1st of 2022, Intuit is also outperforming the S&P 500, so let's go ahead and look at the numbers behind this one. INTU is a quarterly payer in the technology sector, paying $4.16 per share per year with a forward dividend yield of 0.67%. INTU has been paying and growing their dividend over the past 13 years. They have a 3-year dividend growth rate of 14.81%, a 5-year dividend growth rate of 14.1%, and a payout ratio of 21.21%. Now, at the time of recording, Intuit was trading 8.51% off of their 52-week high. They have an ex-dividend date of October 10th with a payout date of October 18th. And looking at this chart, that $10,000 investment would have been turned into $76,699.55, which outperforms the S&P 500 by $42,167.05. 2 quick reminders before we get to the rest of the list. If you guys haven't already left a like, please remember to do so. And also, I want to hear from you guys down in the comments what you guys think of this week's list, so talk to me down there. But now, let's get to the rest of the list. Coming in as the runner-up on this week's list at number 2 is Erie Indemnity, stock ticker ERIE. In total, I've mentioned this stock 5 times on the channel, and if you go all the way back to the first time I mentioned it on September 29th of 2023, Erie Indemnity has also outperformed the S&P 500, so let's go ahead and get a refreshed update of the numbers behind this stock. Erie Indemnity is a quarterly payer in the financial sector, paying $5.10 per share per year with a forward dividend yield of 0.95%. Erie Indemnity has been paying and growing their dividend over the last 34 years. They have a 3-year dividend growth rate of 7.22%, a 5-year dividend growth rate of 7.22%, and a payout ratio of 35.66%. Now, at the time of recording, Erie Indemnity was trading 1.46% off of their 52-week high. They have an ex-dividend date of October 7th with a payout date of October 22nd. And looking at this chart, that $10,000 investment would have been turned into $89,743.07, which outperforms the S&P by $55,210.57. And here we are, you made it. Number one on this week's list is Cadent, stock ticker KAI. In total, I've now mentioned this stock 7 times right here on the channel, and if you go all the way back to the very first time I spoke about it on April 7th of 2023, KAI is also outperforming the S&P 500, so let's look at the numbers behind why I like this stock and why it came in at number one on this week's list. KAI is a quarterly payer in the industrial sector, paying $1.28 per share per year with a forward dividend yield of 0.38%. KAI has been paying and growing their dividend over the last 12 years. They have a 3-year dividend growth rate of 7.06%, a 5-year dividend growth rate of 5.99%, and a payout ratio of just 11.86%. Now, at the time of recording, Cadent was actually trading 7.79% off of their 52-week high. They have an ex-dividend date of October 10th with a payout date of November 7th. And looking at this chart, you can see why I like this stock long term. A $10,000 investment just 10 years ago into KAI would have been turned into $92,668.52, which outperformed the S&P 500 by $58,136.02. With that being said, if you made it here to the end of the video, but you're watching it on or after October 7th of 2024, it would be in your best interest to make sure you're subscribed to the channel.
And why is that exactly?
This is simply because some of the ex-dividend dates I mentioned in today's video might have already passed, which means you just missed out on those next dividends.
Catastrophic!
While that's not the end of the world, all of these stocks are quarterly payers, which means you now need to wait 3 long months before your next dividend payout, and we all know
Ain't nobody got time for that.
Before you go, don't forget to use that comment section down below to let me know which one of these stocks piqued your interest the most, and if you guys like this style of video and you happen to miss last week's, make sure you check that out right here. But until next time, see ya.